Hey guys, BA here. Hope everybody's doing okay. It's been a while since I put one of these out. I'm primarily focused with working on those three primary trading objectives that I'll put back in play once I go back full time again. So it's the little short-term intraday model that I work on, or it's finished. Works pretty good, and then the other two, the intraday options trading, which is really simplistic, it works really good too. And then the others, um, the the theta, I guess the theta machine, the one where I focus on selling premium and try to do it with as little risk as possible. But hey, I just wanted to show you a couple trades I'm looking at for down the road, because markets are pretty interesting right now. We're creeping up on central banker, like a convention right now, where they're all going to say the same thing. We think they are. Wouldn't it be weird though if our FOMC went against the crowd? Um, Last week there was better than an 88% chance that they were going to lower interest rates this coming week. It should be Wednesdays when they make their announcement. I looked at the stats this morning at the CME, and now it's like 79% chance. So it's going down. Um, yeah, I guarantee you the central bankers are freaking out right now over the bond market move. That is sweet. It's a sweet move. Finally been vindicated in this move in the bond market. So I was short back in here, short up in here. I got really short bonds up in the 165, 160. When it kept pegging 166, I kept laying them out. I'm still short. I did sell some puts against my short position. Not a lot. I'm weighing whether or not I want to let it see if it touches this 156 area before I take my shorts off and just leave the short puts on. That's kind of my position now in the bond market. But I got to tell you, this is a big move in the bonds. It doesn't surprise me. It surprised me that my positions work this early. Normally I have to wait 18 months or longer before these stupid bond market moves ever play out. But this one's playing out. I didn't have to take but maybe a month worth of pain. So it seems like I never learned my lesson in the bond market. It's the only market I trade just on the seat of my pants. And I always will. I'll never trade that. Never trade this market any differently. This move up in here was just utterly ridiculous. Let's look at the rates on the 10-year notes. I mean, look at this move, guys. This is the interest rates. Back on September 3rd, the interest rate was, it says 1.43 down in the lower, 14.3, but that's, the interest rate is 1.4%. It's 1.9%, like a week and a half, 2 weeks later. I mean, this has got to just have those bond douches just up in arms right now for a move like this. Everybody thought interest rates were going to go sub-zero in the United States, like they were every other central banker controlled country. So hey, the interest rate cuts were already priced in. That's what this move is telling me right here. Now, once again, I could be wrong, and this thing could capitulate, roll back over, and go back down to lows again. But I'm basking in a little bit of glory right now, knowing that these bond fags are getting their meat handed to them right now in this move. Hey, I've always described the bond market. It's one of the biggest markets around. And when we get into markets like, I mean, look at this move in the 30-year Treasury bond market. That's utterly insane. I mean, it's an insane move since September October, November, yeah, October, November of last year. That's just one of the most insane moves I've ever seen in the bond market that quick. So this move right here is measuring this low from April to move. If we went back to the low back in here, and let's do that and just see where we have some confluence. We don't have to be close or really exact to measure this. We're just looking for areas. Yeah. So for me, this would be a high probability area right here. In that area right there for the bonds to rest for a little bit and gather legs for another rip-roaring rally. I don't know if it'll make it back down in there, but that's where that long-term pullback. We got two different retracement areas we're measuring from, where there's closest amount of confluence. So that looks, yeah. At 50% from this move, and then the 38% retracement from this move right here. So that 155 and 156 area. We could get it this week. Again, let me take one of these off. All right, so that's what I'm looking at in the bond market. I'm going to hold through Sunday night just to see where we stand with this. If it rallies back up, I'm going to hold my position. I've got some short puts on that'll give me a little bit of a buffer on a rally back up. I don't think the move's over just yet. I would like to see it touch that 156 to 155 area before I pull all my shorts off and leave the short puts on. So that's what we're looking at in the bond market. Just an incredible move very quickly there. All right. Let's get back to the SPY. Okay, guys, one of the things I'm doing, I'm in the SPYs every week, trading, selling some theta in a unique strategy. We'll leave it at that. But you guys know, for most of you that know me for a long time, you know I go back and do hand data calculations on the SPY and the SPX. Well, what I do is no secret. I just take from the close on Friday and plot 1.5% above, 1.5% below. And then on my Analyze tab, here's the 1.5% marks right here. This is where SPY closed Friday. And then I also plot the 3% lines. Price 99.9% of the time is confined between these lines. Okay, so we're going to get to this trade in just a minute. So that's all. I just put these lines up, and what I want to do is I want to put trades on around these areas, because the market has just been touching one of these areas or the other every week for, oh my gosh, for just about ever. So so the play here is to put a trade on around these areas and just let the market get to it. And then for you guys that know how to sell premium and adjust deltas, you try to trap it in those areas if you can, or go with it. That's the decision. Leave that up to you. But I'm going to show you a low-cost way to get into these trades to give you a chance to play with it and adjust them. So what I do is I put calendars on. I put calendars on when we get to a situation like we have today for next week. All right, so here, guys, I've got 2 calendars on, and I know all you guys that are looking at this, you're like, holy cow, there is no way you can lose in this trade. I mean, look at the center. You even have a profit there in the center. Well, it's very deceptive. If you put this trade on, guys, put it on small if you're not accustomed to calendars. Calendars have a unique feature about them that you got to be wary of, and that is that when the premium or the intrinsic value gets taken out of these long options that we have in the calendars, this center is going to sag. That center is going to sag to about $5,000. So if the price of the S&P ends Friday right here in the middle, you're going to be out $5,000 if you're trading the size I am. Do not trade the size I'm trading on this right here, okay? This position right here is, here's the trade. So I've got 400 contracts on up here at the 306 strike, and 300 contracts on here at the 296. Now I'm using calls on both of these. I'm not going to walk through this trade. You guys can clearly see, where the shorts, where the longs are. I'm not manipulating anything. I'm just putting a trade on, letting the market get to one of these areas. I think there's going to be potential fireworks out of this FOMC coming up here. If we were to have an announcement I hope we don't get an announcement Sunday night. That'll jack this trade all up. So all bets are off on this trade, guys, if we open up 30 handles higher or 30 handles lower, okay? So I just want you to be clear. If we open up within, say, 5 or 10 of where we're at in the S&Ps on Monday, which is 50 cents to $1 on the SPY, then this trade's still intact. What my objective here is to capture the price inside of one of these spots here, and then apply what we know in delta adjustments to keep it there or to start increasing. Okay, I'll be down just a second. And to trap it up here in this area, and then make the delta adjustments and keep it there, or go with it, or start raising these legs up. That's the game. Okay, so just be patient, let it get up to one of the 1.5% levels, and then play for it. Do this thing small, guys, okay? Don't go out there and put 500 contracts on this thing like I'm doing it, and you don't have a good feel for how calendars end the week. Okay, so just trade it small to get accustomed to it. And the way I adjust these are with calendars. I kind of manipulate the calendars though, so I don't really want to get into that here. So anyway, I wanted to show you this trade, show you what I'm doing, show you what the logic is. Hey, if you want to follow along and give it a try, by all means do so. Just put the trade on, first thing Monday morning. You'll be all right. The shorts expire on Friday. The longs expire next Monday. Okay, so you have got to be out of the shorts on this thing on Friday before the close. All right, so if you're in the money on any of these, get out, close the trades out. Now, calendars open you up to all kinds of possibilities for leaving trades in place. I'm not going to get into that, but they're really, really unique. And sometimes it's like holding a lottery ticket, and you need one lottery ticket and about 500 to pay off. So that's why I like playing calendars as well. Okay, so that's all with this trade. Gold, I think, is in another interesting position. Let's look at the chart first. If you think gold, depending on what the announcement's going to be, could move 10% lower, 10% higher, which I think it could between now and December, let's show you what the trade is for that. What I'm going to do is I want to buy a straddle, 20 December 19 straddle. So I've got the boundary set at 10% just to show you what that looks like. Now I'm buying 3. The cost is about $2,000. So at 10% up, it's a $2,300 profit. 10% down is about about $2,000. So 10% one way or the other, and you double your what you put into the trade. So I think that's a pretty safe bet. Don't worry about the low area right here. You can always cover that with with another calendar, or you put an iron condor in there if you want to do that as we get closer to December and it's sagging. So I just wanted to show you that trade. Just one stock. I got a lot of stuff I followed, but this is a potential. If any of you guys like those cup and handle patterns, here's one for CRM. So it's this looks like a cup, the rim, and the handle. So if this thing gets above, say, 158 and some change, I think it's going to go back up to the highs. So again, I'm introducing you to some calendar plays. You do this 10 times, you only got $230 in the trade. It only costs you 23 cents to get in. That is all you can lose. And then if it gets back up into that area, you can see what the profit is. It's 10 times what you're putting the trade. So just food for thought. I want to show you this trade, so in case you want to start using some calendars on some of these trades, some of your setups, by all means do so. Just give them time to work out, and you put a few of these on, and you can already see that if this thing starts moving up, you're going to get profit, from the theta line. So there's, you can make a lot of money with these calendars when you're right on moves like this. A lot of money. So anyway, just want to show you that they're low cost. If you think they're going to get up into an area or get down into an area, put these things on. Hey guys, that is all I wanted to show you. Hope you guys have a good week. Hey, listen, if anybody's tried to call me recently, my phone's not working. It kind of met with an abrupt end. There was an object that fell on top of it multiple times a few days ago. So we'll leave it at that. Should be back up operational on phone here in a couple of days. So anyway, hey, hope you guys have a good trading week, and it's BA out.